This is a screen recording for those of you who are having difficulty with the ledgers. We're going to look at the assets first. I'll go through each just one at a time, and if you can open your screen and do it with me as well. So I've double clicked on the screen here to open this up as an Excel document. So you can see rather than right click and worksheet object open. And the information down the bottom is what we're going to put in. So first of all, we've got the bank account, which is an asset account. Because it's an asset account, we're expected to have a debit balance. So we're going to put the beginning of the month. Can't see what month it is. It looks like March. So we're going to put the 1st of March and put balance. And it tells us down the bottom here that the opening balance was 1950.37. I'm going to type DR because DR means debit. It means a full bank is a positive balance. Note that there's nothing in the debit or credit column. That's for transactions, and there's no transactions. It's just a balance. We'll do the same for equipment. We'll put the opening balance in first, 1st of March. And in the balance column, we had 87,304.22. Make sure you're doing the numbers as well. And again, because it's an asset, I'm going to write DR. You see on mine, we've got all these hashtags. It's just because the column isn't wide enough. So I don't know if I can do it on this one. Yeah, there we go. We just need to open that column a little bit. All right, so we've got the two opening balances in. Then what we do is we find in the cash receipts journal and cash payments journal different items. This happened on the 12th, this happened on the 13th. So we'll do the 12th first and the 13th second. Cash receipts journal had total receipts and sale of equipment. So what we're going to do is put the total receipts in the bank. So we'll put the 31st of March into the month, and we're going to type receipts. This is money coming into the bank account. We've got a figure here coming into the bank, so we'll type that in. In real life, as you're doing this, or when you're doing the assessment, you just type equals and click on the bank figure in the cash receipts journal. Our opening balance was 19,000. We're going to add the receipts because it's money coming in, and it's still a debit. If we had no other payments, we'd have $40,179 in our bank account. And then we'll put the payments in as well. This figure comes from the cash payments journal, and it's a bank figure in the cash payments journal. Normally we type equals and click on the bank figure there, but in this case, we've got a payment of $38,199.20. And we'll subtract the payments off the receipts. So at the end of the year, end of the month, we've got $1,980.42 in our bank account. And that's bank done. Opening balance plus the money coming in minus the money going out is the ending balance. These ones here, you should probably format the 2 decimal places. Over here are the equipment. We've got an opening balance, which we've already put in. And we can see that on the 12th of March, we sold some equipment. So I'll put the date 12th of March. This will be in the sundry column. And we got cash for it, so we'll put bank. When we sold it, is that going to increase or decrease our equipment account when we sell equipment? So it should decrease it because equipment's leaving our business. So if the debit balance decrease it, we're going to credit it. And normally we type on equals, click on the sundry column, the equipment part there. But in this case, we've just got a figure. So we've got 2224.01. And we're going to subtract that. A debit and a credit is a lower debit. Still an asset, so it still has a debit balance. And then in 13th, on the 13th, it tells us we purchased more equipment. So we put the date when that transaction happens. We paid cash for it, so we've got our bank. And because we purchased it, we've got equipment coming in, and we'll add those two. Right, make sure that's right on yours.